You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome to the show, Tim.
Jim, thanks as always for having me.
At the time that we're talking, the equity markets in Canada and the U.S. all in the red, but I see the gold is up slightly.
Yeah, I still think that the rally with gold is, it's up good. It's up good, actually. I'm showing $24. I don't know how accurate that is on the little delayed quote thing here that I'm actually looking at. But no, we've had some, short-term lows in gold, short intermediate-term lows in gold. In the bigger picture, I still think it's counter-trend in that, the 9-year cycle, I think is still headed lower. But, I've said that there would be intermediate-term rallies and short-term rallies along the way, and I think that's what we're seeing with gold.
We haven't seen the huge rush, though, that you usually see when equity markets start to head down. Is that because people still believe they're going to go up?
I don't know. I let the market stand on their own 2 feet. And, the reality is that initially in 2007 and 8, into early 8, gold did rally, but then it cracked, and I want to say in the order of over 30% into the 08 low. I mean, it went down, say 08, it went down into late 08, equities went down into late 09, early 09. Jim, I don't know. I let the market stand on their own 2 feet because what I have learned is that sometimes these relationships, and when I say relationships between the markets, and you say, well, when this goes up, this goes down, and vice versa, those relationships, when you look at them over time, they tend to fall apart. So I have found this better not to try to draw those correlations because, you really can't. But gold, like I said, I think the longer-term trend is down. Short, intermediate term, yes, it is up.
What do you see for oil?
Oil, we had an intermediate degree low back in, and I'm pulling up the chart as we speak. We had an intermediate degree low. You're going to edit that out because I don't have the chart, and I've got to get the chart to tell you exactly. We had an intermediate degree low in oil in August. And from that intermediate degree low, of course, we bounced. And so far, that intermediate degree low is still intact. But the problem is the structure of the market. When I say structure, the August low violated the March low, and the March low was an intermediate degree low. So we have a violation of a low of the same degree, which is bearish. It's negative. And so what that tells me is that this rally that we're seeing in crude oil is counter trend. Same as with gold.
What other commodities could you see making a bounce? I was told that because there's so much copper in the world right now and the prices are so low, a lot of mines plan to shut down, and that could actually lead to a shortage next year.
I'm sure that those types of things will happen and eventually it'll catch up with the oil market as well. I mean, production will shut down when prices are depressed because it's no longer viable to mine or to drill or whatever the case may be, and that's what makes the cycle. That's what makes the cycle. And so, yes, I have no problems with what you're saying at all. But as I look at copper, I brought up a chart. As I look at copper, the longer term is broken there too. This entire commodity complex. What we are facing, Jim, is deflation. That's what the powers that be, the Fed has been fighting since 2000 is deflation. And all of the advances that we've seen, with oil going into, the 2008 top and the housing bubble that they created into 2005 and pushing and extending the equity bubble into the 2007 top. All of this is because of the liquidity infusion to fight that deflation. And you know what? This time around, if you just stand back and take a breath and look at this, coming out of the '02 low, deflation, or going into the '02 low, let's start there. Going into the '02 low, deflation had its hooks in the economy, and it was having its way. We rolled over into that natural 4-year cycle low in '02. And as the market tried to, roll over, the Feds are weakened as it came out of that low. The Feds, they had to stimulate, and they did. And they cut rates, and they stimulated, and they caused all these bubbles. And why did they do that? Because they're fighting the deflation. It's real simple. And so they have been fighting that since then. Well, we all know the story. It all run up into 07, 08, and then it all collapsed into late 08, 09, and then the cycle started over, out of the 09 low, 08 lows in commodities. Okay, so here we are. Now that's busted. But on the upside, coming out of those lows in 08 and 09, commodities did not participate this time. I mean, we didn't see oil back to the highs that it was at before. We haven't seen any of the commodities. Gold did push to a new high in 2011, but it's since rolled over hard. And so the last man standing with this liquidity battle, if you will, is has been equities. And now that's broken. And so it's all about, it's real simple. It's deflation. The markets and the economy are trying to deflate, and the powers that be are trying to stop that force. And, it's just like any other cycle. It's not a negative thing. It's not gloom and doom. I mean, it's just a cycle of nature. It's like trying to hold back the light of day by, breaking out the generators. I mean, the light of day, the dark of night, by breaking out the generators and shining the lights and saying that it's not dark outside. Well, okay, we have light, but it's still dark. And that's kind of what they've done with this economy. It's still in the gutter, but they've camouflaged it with the light, with equity prices being higher. And what I'm saying is, this time around, the only bang for the buck they got was pushing equities to a new high. And that is now coming unraveled.
We'll ask, is deflation a bad thing? When we return with Tim Cyclesman Wood right after the break.
Unbelievable harmonies, spectacular performance, Bird Dog and the Vintage Electric Band, the ultimate tribute to the Everly Brothers and Simon & Garfunkel in Oliver, October 2nd, in Kelowna, October 3rd. Buy online and save at ontourtickets.com. More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're chatting with Tim Cyclesman Wood. Tim, you're saying all these institutions are trying to create inflation. And it seemed to me back in the late 70s, early 80s, inflation was killing us. Mortgage rates were at 20%. You couldn't get a car loan for anything less than 18, 19%. Why would we want to see inflation? And is deflation a bad thing?
I don't think deflation is a bad thing. I think the reason they're trying to inflate is because they're trying to inflate away the debt. And I think that if they can't inflate, then I think everything implodes. And I think that's the bigger thing. I think that's what they're trying to avoid. It makes more sense to me to live in a world to where, a simple example. I remember being a kid and being able to go and buy, and I'm not that old. I mean, I remember being able to go and buy little quarter hamburgers as a kid. I remember even as in college, a burger at the Sonic Drive-In was 99 cents. And now you go to, I went to a Whataburger place the other day, a hamburger's $6. A milkshake is $5. Are you kidding me? And I mean, seriously? And that's just nuts. And so, they can argue there are pockets of inflation, obviously in grocery prices and stuff like that. And no, I don't think that's a good thing. I think we had a much better environment when people made $30,000 a year and the price of a house was $30,000 and a hamburger was 50 cents. I believe personally that the politicians and the powers that be have just kind of wrecked the economy and the value of the dollar.
Well, what about that pharmaceutical company that bought up that anti-parasite drug that was selling for $13.50 a pill, and they boosted it to $600 a pill? I mean, there's your inflation.
Yeah, and that's I don't know if I want to call that inflation or robbery. I don't know how to think about that. On the one hand, when I think about that, that's wrong from the perspective that there's people that need the drug, and that sort of a price increase is insane. But then on the other hand, the free enterprise tells me that, hey, if you own the rights to it, you can charge what you want, and if you can't afford it, then hey, you can't afford it. So, that gets into that's a really difficult area for me to get my mind around. I mean, I see both sides of that. I really do. But the bottom line with the market is that, I think deflation, I think modest inflation is needed for, a healthy economy. But this cat's got out of the bag. And I was reading an article last night, for example, about rents. The government statistics tell us that, that we're in a low inflationary environment. But if you look at, this sounds like double speak, but let me explain. If you look at, really go look at the price of food. You go look at rents, and it was talking about how the price of rent is outstripping the increase in people's wages, and how it's taking more and more and more of the household budget to pay the rent. And so, yes, there are areas of inflation, no question, but it's happened because of the Fed and their action. And I don't mean to just point at the Fed, but it's true. I mean, I understand why they've done what they've done. Maybe you and I had done the same thing if we were in their shoes. So I'm not being completely negative. I mean, they're trying to stop what they think, I guess, is a bad thing, the implosion of the economy. But what they have done is created inflation in the wrong areas. I mean, they have created an environment to where, people's wages have not gone up, but then the cost of living has gone up. But then within the context of that, there's this higher level deflationary forces bearing down on the economy. That's just, and I think they will have their way. I think the deflationary forces, that is, I think it will have its way. It will collapse, and I think that's a good thing. That's part of the Kondratiev cycle to purge all the excesses and all of the debt and so forth from the system. And that's what's trying to take place and has been since 2000, and I think it's coming. It will come.
Why do these central banks feel that they can really have an impact? I think they only delay the inevitable, don't they?
I think they only delay the inevitable, but I think they do it because maybe they feel, I don't know, I'm not in their head, but I mean, if I have to think that if I was in them, I mean, in their shoes, that they probably are looking at this thinking that they can control it, that they can manipulate the economy, that they can manage it. And I beg to differ as a technician and a market historian. You can't. It's a cycle that needs to ebb and flow. I don't think there's an ill intent there by the efforts, but I think the efforts will ultimately have very negative consequences. Well, they have. I mean, look at the facts. Go back to the 80s, the 70s, the 80s, and into the 90s with the tech boom and so forth. I mean, we had a real economy with jobs and prosperity. We didn't need a Fed intervening in the market and doing QE programs and endless liquidity. Things were healthy. People had jobs. We weren't reading articles about people not being able to make their rent payments and so forth. It was a healthy secular bull market, and so was the underlying economy. But we turned that corner in 2000, and all they have tried to do in reality, is to continue that cycle. They tried to extend that cycle, and it doesn't work that way. It doesn't work that way. It has to contract. And so in the end, what they've done is, like you said, prolonged the inevitable and made it worse. And an example of making it worse was, look at the fallout from from the push into the 2007 high. We had the worst financial collapse, or I guess you would call it a collapse. I mean, I would certainly call it a collapse, but the worst financial crisis since the Great Depression. And what do they do coming out of that low? More of the same. So why would we expect anything any different this time?
People keep expecting the Chinese government to try to pull another rabbit out of the hat by taking money away from municipalities and putting it into the national government, but it's still government and it's still artificial.
Very true. Very true. And people always turn to someone to fix the problem. You know, and really what needs to take place is they need to back up and let the smoke clear. If they, you know, there's a historical relationship that the secular bear market has typically run about a third the duration of the preceding secular bull market. If they had stepped out of the way, let nature take in its course in 2000, the natural bottom for this market would have been 2009-10. It'd been over. And this would be 1982 right now. No, this would be 1985 right now. We would be fine. We would be fine. We needed that washout, and they haven't let us have it. And now it's coming, and it's coming in a bigger way. You know, the statistics tell us that we're going down eventually. This decline, this 4-year cycle decline, is going to take us below the 09 low. I know it sounds crazy, but until it is proven that that statistic is not going to be fulfilled, I have to stand by it because of its accuracy. I mean that's the numbers.
The Yellen sellers on the financial television networks won't like to hear that. And I guess that's why they love to invite you as a guest, don't they?
Oh yeah, I'm on there all the time. No, they want. You know, we had the decline into the August low, and they had every expert on the planet telling people that everything was okay. Well, if they're such experts, why weren't they there telling people, warning them of the decline in the first place? Where were they in 2000, in 2007? Where were they with regard to the housing bubble? Where were they, you know, I mean, come on. These people are cheerleaders. And the unfortunate thing is that people listen to them. They rely on the news to be factual, and it's not, especially when it comes to the financial markets. It's cheerleading. You know, it's a party line, and it's leading people to the slaughter, in my opinion.
I was going to say cheerleaders don't play the game, but they're certainly loud and pretty no matter what's happening and no matter how bad your team is.
Exactly.
Tim, thank you very much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Check out our popular YouTube channel, Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.